If you're mystified by how the markets perform on a daily basis, don't beat yourself up. You're in good company. Many investors, including highly experienced professionals, missed the bottom for stocks in March 2020 and got in later, only to encounter unparalleled volatility. Some investors got out completely, seeking protection in bonds and income-oriented investments, only to see many supposedly safe holdings drop sharply when interest rates spiked this year. Truth is, very few investors can get market timing right, especially if they're basing it on their emotions.
When reading news, analyzing economic data, and watching the markets get to be overwhelming, we recommend taking a step back, blocking out as much of the noise as possible, and focusing on the basics. Like, do you have enough cash and income for the next few months? Sometimes during these times, we recommend looking at your statements about as often as you go to your dentist. You are always welcome to call us for an update as well. Investing intelligently, having a plan, knowing what you own and why during these times is more critical than ever. After all, you can't expect to achieve your financial goals by sitting on the sidelines and keeping your portfolio in cash. With that in mind, let's look at where things stand now, what may lie ahead, and how investors can best position themselves to achieve their individual financial objectives. As we do so, remember that these are general observations. Any specific investment decisions should be made in consultation with your financial advisor and should reflect your individual situation, risk tolerance, and personal objectives.
While volatility and rising rates do pose risks, some investments are poised to increase profits and make money in this new economic environment. It would not surprise us to see the Canadian economy enter a modest recession early in the new year and start recovering in the later part of 2023. What does this mean for your stocks or equity investments? Typically, the worst is over for stocks before it's over for the rest of the economy. In almost every case, the markets bottom out roughly 4 months before the end of a recession. This is because, as the old Wall Street adage goes, prices lead fundamentals. The stock market falling into a decline is traditionally an indication that most investors believe we're headed for a recession. Markets typically reach a top and already start to fall when the fundamental news is the most positive. Life seems great, businesses are busy, and everyone seems to be out spending money. Markets typically bottom out and start to climb up again when the news and reports are the most negative. The old bull markets climb a wall of worry adage refers to a tendency in financial markets for stocks to rise in the face of seemingly insurmountable problems. However, it turns out that the problems are temporary and they're eventually resolved.
For your equity portfolio, we believe investors should begin adding quality businesses and sectors that are likely to increase dividends and share buybacks. Companies with pricing power and the ability to continue growing as the economy changes are good bets. Financial, industrial, communications, and consumer discretionary sectors are estimated to show double-digit increases in earnings in 2023 and 2024. For your fixed income portfolio, one approach that is proven to reduce your risk is to focus on bonds with lower durations, shorter terms to maturity, since they usually react less to an increase in rates. The reason is that investors who own bonds that will mature in a few years may not be as concerned with interim price movements, since they anticipate redeeming those bonds at full par value and reinvesting the funds sooner rather than later. Bonds also give investors more liquidity than most GICs.
Part of the answer, although it may seem counterintuitive, is to pay less attention to the markets and more to yourself and your financial goals. If we're honest with ourselves, we know that it's our emotional reactions to what the markets are doing that often cause us the most trouble. Reach out to us today. We're here to help.
The Heart Wealth Management Group of Raymond James is here to help make your life easier, doing what's best for you today and for your future. With our consistently caring and conservative advice, we'll help bring your financial future into focus by caring for your wealth with heart. Give us a call today.